All right, this is brief exercise 4-6, and we can find that in your text on page 177. Again, they're giving us some information here for Crestwood Golf Company. This is the income statement. They're showing us their revenue of $13,600, salary expense, maintenance expense, and then we have a net income of $2,900. They want us to um, journalize the closing entries and then just post them to the T accounts. All right, so let's see, step by step. We want to close out our um, revenue first. So revenue, let me put that into the T account. Revenue always has, well, it normally has a credit balance. So I'll put that amount in there. This is way too small. Let me just make these this bigger for you guys to see. Bump that up to 14. All right. So there's my revenue, and then let me put my expenses in. Now expenses normally have a debit balance, so I have salary expense of 8,200. So I'll put that in here. And same thing with maintenance expense. I'll put the 2,500. And again, expenses normally have debit balances. Revenues normally have credit balances. If they don't, then that warrants investigating as to why there must have been some sort of error in a journal entry that was made. Okay, so our first closing entry is to close out the revenue account. If I have a credit balance of 13,600, in order to close out this account, I would need to debit it by the same amount, 13,600. Closing out means bringing that account to zero. It's the end of the year. I want to clear out my revenue and expense account so that I can start recording for the new fiscal year. All right, so getting back to my first closing entry, I'm going to debit green fee revenue for 13,600. And then we learned about this new account, the income summary account, and you want to think of it as just the bucket that you're throwing your revenue and expenses in, and then you're going to see what settles out. What's the balance after I do that? And the balance should be this net income of 2,900. All right, so we're going to credit the income summary account for the 13,600. And then I'll record this entry here. So I have green fee revenue of a debit of 13,600. And I have in my income summary a credit of 13,600. Okay, and then finally I want to close out my expense accounts. And again, expense accounts have debit balances, so in order to close them out, I would have to credit them by the same amount. So let's see, I have my salary expense and my maintenance expense will be credits. And then again, I'm going to dump this into the income summary account. So if I'm crediting these accounts, I need to debit an account, and that would be my income summary. Remember, your debits and credits must equal for each journal entry that you make. All right, so let's post this one now. So I have income summary of a debit of 10,700, and I have my salaries expense credit of 8,200, and then maintenance expense a credit of 2,500. So you can see my revenue and expense accounts now become zero, and my income summary, if I calculate my balance here, I'm just drawing a line so you can designate the difference between seeing the balance and actually seeing entries being posted in there. So I'm just going to take the credit of 13,600 and subtract from that my debits. And so we have in my income summary account a credit balance of 2,900. And I think that's all they really wanted you to do. Post the entries to the revenue and expense accounts and just prepare the entries to close the revenue and expense accounts. So we're done. But remember, there are 4 steps in closing your accounts. So the first step is closing out the revenue, second step is closing out the expense, and then our third step would be to close out this income summary to our capital account and then close out any drawing accounts, any amount in the drawing account. All right, that's it for brief exercise 4-6.